Tuesday's market closes were mostly higher with the exception of the wheat market. Here to talk about that is Tom Fitzenmeyer with Summit Commodity Brokerage in Des Moines. Good to have you along, Tom. And let's start off with the corn market. A pretty decent recovery and performance on Tuesday, considering the fact that we had a 73% crop rating, good to excellent nationally on corn, and the wheat market was lower. It held up pretty well.
Yeah, I thought it was very positive. Well, number one, corn had become oversold. It was kind of getting down to the point where it tends to turn anyway. And then you had the positive of the fact that the crop rating came in a little better, the planting was solid, and yet corn moved higher, and that was in the face of a weaker wheat market. All that was pretty positive corn market. Demand is obviously good. Ethanol producers are making good money. Exports have been a little soft lately, but I think as time goes on here, that's probably going to pick up too. The livestock producers, they have no place to go. They can't switch to wheat. They've got to buy. So I think corn's got a good story to tell, and I think we'll see it come back and test contract highs, even take those out. You've got the other positive today was that they've put some heat and weather in the forecasts for the last half of June, which initially will probably the crop help development and push it along a little bit. But if that lingers into the 4th of July, it's going to be another positive for corn price.
So the other impact that we've seen, corn and wheat had just a big sell-off last week because of Russia coming in and saying that they were going to allow some exports, humanitarian exports out of Ukraine. Again, that's been back and forth here. So the corn and wheat market have been having a hard time trying to figure out which direction to go with that, right?
I'm a little surprised everybody got sucked into that the way they did last
week.
Too.
I
just don't see how that's possibly going to happen. Why would the Russians allow grain to be sold to enrich the Ukrainians so they can fight against them? Number one, seems highly unlikely. Number two, Putin obviously doesn't seem like a real humanitarian kind of a guy. So that's the other thing. They wanted sanctions lifted. Nobody's going to lift their sanctions. So on the cash market, the EU cash price for corn's firmed up the last couple of days. Our cash price is pretty solid. So I think the world's kind of figuring out that, that's not going to happen, and we're going to have to figure out how to get by without that much grain moving out of that Black Sea region.
You bet. Now, we do have a little bit of early harvest going on in the winter wheat areas, and it sounds like maybe only 5%, but yields kind of disappointing to start off with.
Yeah, just the fact that it's starting is probably a little bit negative for wheat. The wheat market's kind of strong, but I expect it to find solid support too. Now, when harvest starts, it's always a little tough for wheat to get much going. So we may just chaw on in wheat for a while until we sort of figure out how that all works out.
Yeah, obviously a little harvest pressure maybe going ahead here. What else? What about the soybean market? So we did get above the $17 mark, and it looked like we got some pretty good technical buying activity in that market after that point.
Yeah, the soybeans got a little bit of a kick of last week as they were unwinding that corn-soybean spread, selling corn and buying their bean contracts back. The soybeans have a good story to tell on their own too. I mean, the crushers are making good. There's good solid demand for soybeans from the few farmers that still have any left. Exports, we've already met the USDA's projections with almost 3 months to go into marketing, so we don't have to sell much, and we didn't sell a lot this last week. But anything we sell just adds to our production numbers and subtracts from the carryout. So it's going to be interesting to see in this WASDE report Friday morning on what kind of adjustments the USDA does make to exports because of that.
Yeah, I think everybody thinks that maybe ending stock should be under 200 million bushels with an increase in exports. And so could we be seeing a little position squaring ahead of that report in anticipation already?
Yeah, usually you don't see it quite this early, but certainly could be a possibility. That wouldn't surprise me at all. I mean, it's a pretty important report. I don't suppose there's going to be much acreage, but that's something that everybody's a little concerned too, is whether those acres in North Dakota will all get planted. So there's a lot of things on that are pretty supportive of the soybean market.
Yeah, plus meal was up today, and that
And
always
we did
helps.
have an announcement, right? And we had an announcement of a sale today too, which is always, a positive for the market.
You bet. And like I said, and meal was up today, and we certainly like to see the meal be the leader.
Right, right. Anytime you have a good soybean market, it's got to be led, almost has to be led by the meal market. I mean, lately it's been led by bean oil simply because of the strength in the crude oil, the biodiesel aspect of soybeans. But ultimately, meal is going to help pull us up.
Let's move over into the livestock sector. Did we just bounce off some support there technically, or did the boxes being higher at noon help to kind of support that market today?
Well, the boxes help, but the cattle market got oversold too and overdone on the downside. We've got this big tug and pull here on the cattle market between a period with lows. On the other hand, are we going to be a period of demand to the uh, tightness and a lot of that money being taken away by gasoline price and a cut into the beef demand, and that's still an open question.
Yeah, obviously it is. Do you think,
Obviously, if you look at the deferred,
all right, you're cutting out just a little bit on us. Do you think we're just going to
yeah,
move kind of sideways here now until we have a little bit better sense of how demand is going to be impacted here, especially by these higher gas prices?
I do. I believe we are. Under normal times, I would think we'd probably go back and test the top traded. I guess because of those concerns about demand, I'm not sure that's going to happen this time. We're probably more likely to, like you say, chop around in a fairly narrow range until we kind of get out as the midsummer time period.
Yeah, and hogs look like they may do the same thing, huh?
Yeah, hogs are definitely in a trading range. I don't see them breaking out of that. They've got the same demand issues that the cattle and poultry do to some extent. So I guess we're going to have to see how that works out. We're probably about right, priced right for the numbers.
Yeah, although the cash market and the index have been rising, and so at least that's a good positive. I don't know how far do you think that can push this market, but at least that is a positive.
Yeah, it's a positive, but I don't see it going all that far. I think that's going to stall out, and we're just going to, like I said, chop in the hog market here.
All right, thanks for joining us, Tom Fitzenmeyer with Summit Commodity Brokerage.